Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code. This is the Forex Super Model daily review for Tuesday the 7th of December 2021. Time has just gone 4:30 in the morning GMT. Asian session coming to a close, European session firing up, our lunchtime North American session. Right, Monday the 6th then, the last trading day, we had a negative opposed driver in the yen at -248, front and back door flows mainly going into the pound at +219, into the dollar at +39, and the euro was a negative rock at -10, activity ±258. Intra-week then, this is from that Monday open to about 15 minutes ago, we've got a negative unopposed driver in the yen, -295, no backdoor flows, the opposing positive flows mainly going into the pound at +271, into the dollar at +22, and the euro is the positive rock at +2, activity ±295. Right, so yesterday we had reversal flows from last week. If you remember, last week we had a strong yen and weak pound, and then yesterday we had reversal flows. We got this weaker yen off the back of primarily the pump up in equities, the recovery in equities. We'll talk about that in a minute. Equity transmission, and they had to go somewhere, and they're predominantly going into the pound, which got pasted off last week. So, and the euro and the dollar are relatively static in the middle. Right, intraday then. This is the Asian session to about 15 minutes ago. We've got a positive opposed driver in the pound at +51, front and back door flows mainly coming out the yen at -48, out the dollar at -17, and the euro is the positive rock at +14, activity ±65. Right, so we've got continuation in yen weakness, but it's not driving. The pound's driving on the positive, and the dollar and the euro are switching. So the dollar's weakening and the euro's coming up. Anyway, we'll stop that there and write up the flows. Right, we've written up the flows then. So the euro's weak except against the dollar, the New Zealand and the yen. The yen is weak across the board. The pound is strong except against the Swiss and the AUD. The Swiss is strong except against the AUD. The CAD, is strong except against the Swiss, the AUD and the pound. The AUD is strong across the board. The NZD is weak except against the dollar, the euro and the yen. And the dollar is weak except against the yen. So what have we got? We've got yen weakness across the board. We've got AUD strength. And let's have a look. What else we've got? We've got weakness there, strength there. We've got secondary strength in the Swiss, and we've got secondary weakness in the dollar. Right, so don't forget what's been knocking it about, or will knock it about. We've had this AUD race decision earlier this morning, and then you've got this reaction to the AUD. It's strong across the board. However, you've got this New Zealand dollar weakness, so we're not really. We've got mixed risk on, if you like. So we'll talk about that in a minute anyway. So right, as I said, we've had a neutral to positive Reserve Bank of Australia rates decision and comments and what have you. We've got Euro GDP and JPY GDP coming out today in tier ones. So relatively light, but nevertheless we've got something. And tomorrow, Wednesday the 9th, we've got the BOC Bank of Canada rates decision as well. So and oil has started to perk up, and you're getting a bit of strength in the CAD. Right, so we'll stop that there. Write up the asset classes. Right, we've written up the asset classes then. So US dollar index, it's come off 20% from the modelled high. Gold is at half marks, 0.5, and oil has come up a little bit. It's 0.36 from the floor, so it's come up about a third. Wall Street, S&P Tech, they've all got the same look. They broke resistance earlier, they've got thumped down and they've recovered slightly. Wall Street is 0.24 from the high, 24% from the high, S&P 18% from the high, and the Tech is 28% from the high. So in terms of batting order then, the Tech is the weakest, Wall Street next, and the S&P is relatively strongest. But they've all had a bit of a pasting. Right, US 10-year and the bund, this is the price then. So the US 10-year is 0.42 from the floor, so it's below half marks in price. Yields just starting to think about strengthening up, just below half marks. And the bund, on the other hand, it did this break in resistance on the price, so weak yields. It's now come back to that resistance, and it's the break was about 12%, so it's come back 0.12, roughly 12% from the resistance break. So so the European yields are slightly stiffening up, having broken weaker. Right, copper chopping about 0.40 from the high, so it's above half marks. It's improved a little bit, but it's still messy. And US steel 0.30 from the floor, still soft, 30% off the model floor. Right, let's get rid of that and then do the final analysis then. So, I mean, if you watched yesterday's briefing, we talked a little about volatility echoes. We had a very minor, very sort of low-key effort at going long again on the AUD and the NZD, but we didn't really think it was viable to fill our boots at that time. So anyway, let's just get this going. CAD, AUD. NZD. We've had the AUD rates decision, and it was neutral to positive. We've got the CAD to come tomorrow, so we don't know about that. And we had this with this big pump up in the yen, which has now come back a bit off the back of the equities. And equities, we had this big drop in equities, and it's now come back. So that you've got this equity transmission reversal there. The pound was sold off and has now done the equivalent of its bounce. So you've got reversal flows, and the New Zealand is relative. So the AUD has bounced a fair bit, but the New Zealand is relatively soft. Okay, so which is interesting. Now, if I just grab this. Now, if you look at the Asian flows, then we've got the yen is weak, but it's -48, but it's the secondary driver. Whereas you've got a little bit just over pound strength at plus 51. So, and the dollar and the euro are fairly dynamically static in the middle. Anyway, that's all sort of general modelling gibberish. What does it actually mean? Well, what do we think? Well, when you chuck a big sort of rock in the duck pond, the ducks scatter. And it creates a sort of a big wave of volatility, as we said yesterday. Now, if trading were as easy as you just wait for a sell-off and then buy the dip, as they say, then we'd all be millionaires straight away. So it isn't, because what tends to happen is, so you've got the equity market, and you get this thump down in equities. You've got this problem here where people have held long positions and they've been reduced, or they've gone negative, and then as the market recovers, then people start to think, well, okay, I didn't like that sell-off in equities, but and we're getting near to the point where I'm breaking even or back to some of my profits. I will then get out of my long positions, and this sends the second wave thump down, and this is why. And you've also got other more sophisticated sellers who are looking for this situation anyway, so they're jumping on the momentum of the negativity. But it hasn't happened yet, but it will, because the markets don't move like that. So what we're looking out for today is reversal to back down, basically. So we're looking for a sell-off in the AUD, which has recovered, and a resurgence in the yen again. So we're looking at AUD yen and NZD yen, which is already relatively soft. So we're looking at selling that. So we're looking at short there, and the AUD's had a little bit of a prop up from the rates decision and the subsequent statements. So anyway, that's what we're looking at. We're looking at a further thump down in equities. a positive yen equity transmission, making people run for the hills again, and making those people that have gained a little bit of recovery from this bounce will be bailing out. So that's what we think is going to happen. It may not happen today, but it's going to happen this week. We should almost, we're not guaranteed, but it's very likely. And this will be the second thump down on the volatility. So we had this one, and then you had this dirge period, which we said the market would go up. And now we're looking at this second thump down here, where and we're starting to sort of play the opposite role at the moment. We're starting to sell the AUD against the yen very gently, expecting this drop, and then obviously when we get the full drop and we're happy that it's the reversal signal, we'll try and catch this so-called Santa rally on the way up. So anyway, that's what we're up to. Hope that was useful. See you again tomorrow for the daily briefing. Thanks for watching. Goodbye.